All right, we're gonna have some fun here. We are going to sort of predict where the price of Bitcoin will be at the end of this cycle. I'll explain what cycles are, and of course, like all my videos, we're not going off of gut checks or guesses. We're gonna use data to get there, and then I'm gonna show you all this data together, and then I'll tell you how we use this data. Okay, so the first thing is, you probably already know this, but if you don't, Bitcoin sort of moves on these 4-year cycles. Now, these 4-year cycles are halving cycles where the new supply issuance of Bitcoin gets cut in half every 4 years, causing a supply-demand shock. Okay, now this is sort of turned into a predictable pattern that we have over time. Now we can see sort of like this, and if you're good at patterns, like maybe like an elementary kid could be, you'd see that in 2012, we had this pattern, and then it took off. In 2016, we had this same pattern, and then it took off. In the next cycle, in 2020, we had the same pattern, and then it took off. And now we have the same pattern, and what would happen next? Most likely, it's going to take off again, right? So we sort of have that. You can recognize those patterns. Now, if you look at it in a chart basis, it looks a little bit different. And what you can see is that we have these halving cycles that happened right here, and each one corresponded with a peak. So every time we have this, we get these peaks. Now, there's a delay in which that happens. Typically, the bottom of the price, the lower end, is typically 12 to 18 months after the peak. And then the top is typically 1 to 2 years after the halving, okay? So that's how it works. So what we can do is we can look at the halving, which happened in May of last year, and we could estimate that about 1 to 2 years, about 18 months is gonna put it about the end of this year. But look, these are ranges here, okay? So just let me give you that. Now, if you look at it sort of in this 4-year chart, some of you might have seen this bar chart. It looks like this, where we typically have, so this is going all the way back to 2011 right here. So we can see like 3 green years and a red year. 3 green years and a red year. Now we've had 3 green years, and what happens next? It's anyone's guess. But for those who think Bitcoin is too volatile, look at this price right here. Look how it sits in that range. Okay, but again, we're gonna have some fun. We're gonna think about where this price goes. But what we do also wanna keep in mind, because we're looking at data here, is what we can see in the cycle, first, second, third, fourth. We can see the price at the bottom, 255, 312, 3,200, and 15.5, pretty good. We can see the peak price here, but what we're looking at is the multiple. So it went up 444 times in the first cycle, 62 times, 21 times, and yet we don't know right here because we're still in this cycle. So this is like the law of diminishing returns, or what we call the law of large numbers. So as the number gets bigger, it's harder to move up more explosively. Returns in this cycle, 44,000%, 6,000%, 2,000%, and again, to be determined here. All right, now, again, we're gonna use this to try to guess what the price will be, not so much the time, but the price. Okay, there's a couple problems here and some promises that we have. The first promise is that the pi cycle top indicator is the most accurate one. It's like, I call it like the holy grail of investing. It's nailed it almost perfectly every time. All right, but with financial indicators, we don't ever use just one indicator. We want to look at a bunch of indicators and see how these all come together. So we're going to look at a handful. First, look at the Holy Grail, look at a handful. And then, like I said, I want to tell you what this means both for Bitcoin itself, but also what I call Bitcoin proxies like MicroStrategy, formerly, now Strategy, and what that might mean for a company like that, a Bitcoin treasury company. Okay, so let's first look at the Holy Grail of indicators, which is the pi cycle top. And again, we call it that because it's been 100% accurate. Now, the way it works is basically it takes moving averages, the 111 daily moving average, and then it takes the 350 daily moving average times 2. So when those indicators cross, or when the moving averages cross, it typically signals a top. Let's take a look at it, the track record from 2013, 2017, and 2021. So here we have, in 2013, here's the dotted line, and it nailed that top just perfectly. The next cycle, here's the dotted line, and it nailed that top perfectly. 2021, the dotted line, and it nailed that top perfectly every time. Pretty amazing. So basically what we have is we have the moving averages, which is the green line and the yellow line. So when the green line moves above the yellow line, it signals the top. When the green line moves above the yellow line, it signals the top. And as you can see right here, currently we're about right here. The yellow and the green line are pretty far apart. So at what point do these converge And what does that mean? Okay, well, let's take a look. So first of all, if we were to follow this blindly, we're not going to. I'm going to show you a handful of other indicators. What this would tell us is that this would converge around January 17 of 2027. But doesn't that contradict the normal cycles? Well, yeah, because it should be somewhere around the end of this year, if not the beginning part of next year, Q4 this year, Q1 of next year. But this is saying not until January, Q1 of 2027, and predicting a price of $395,000 would be the top. Now, another one that I really like to use is called the MVRV. That's the market value to realized value. And it's sort of a more grounded method. And basically it takes what the market price of Bitcoin is versus what the realized price. So this is on-chain data, so we can see the last time Bitcoin has moved. The Bitcoin network is anonymous. We don't know who owns the wallets or who they belong to, but they're not private, so we can see them. And so we can see the last time they moved or what that price might be, meaning how much profit or loss that person might have. Now, if we take a look at this chart, by the way, these charts are from Bitcoin Magazine Pro. Check them out online. You can pull up your own charts. And what we can see is that when the MVRV, which is this red line, when it spikes, like right here, it signals a top in the market. When it spiked, it was a top in the market. When it spiked here, it was a top in the market. When it spiked here, it was a top in the market. Pattern recognition. Okay, so where are we here? Well, we're nowhere near spiking, which probably means we're nowhere near the top of the market either. Now, what we do is we take some lines, we take some patterns, and we try to adjust this out. And what it tells us is that currently, right now, there's a range, we're looking at maybe somewhere between 140, but probably closer to $200,000 before the realized price increases enough to show a peak. So somewhere around 140, super conservative, but maybe closer to 200,000 at the peak of the cycle before we get there. But again, these are moving. So, well, I'll tell you how we use these indicators and how we use them inside of the fund a little bit later towards the end of the video. But again, first pi cycle, about 395. Here, 140 to 200. Let's call it closer to 200. All right, let's go back to another indicator that we like to use. Now, this is Fibonacci Extensions. This one is probably one of my least favorite, but for all my technical analysis, all my wannabe traders out there, you know exactly what this is. Basically, it's a mathematical or a technical level of price levels that would hit either on an up or down swing. So it's technical levels from previous cycles. Now, these are math-based. One of my previous partners, he was an amazing wizard on technical analysis. I call it like reading tea leaves, but we're gonna take a look at it either way. Now, what the Fibonacci does is it identifies resistance levels that could keep the price from moving up, but also support levels that would keep it from dropping down. Now, if we take a look at the Fibonacci, if you're a trader and you like these, if we look at the Fibonacci levels, what we see is that the extensions are currently projecting on a conservative basis, a base case, or an optimistic, a bear or bull case, Bitcoin to be somewhere in the 145 price range, somewhere around here, maybe up to 170, but maybe as high as about 220,000. So bear case 145, mid case 170, bull case 220. What did the MVRV say? It said the same thing, between 145 and 220 as well. All right, so we're starting to see some confluence in factors there. What does this mean for stocks like MicroStrategy? So MicroStrategy, or now Strategy, is basically a proxy. It's a levered way to play Bitcoin. So for example, if we look at MicroStrategy, here's bonds in the last 5 years, since August 10th of 2020, is down. Bonds are down 4%, you've lost a lot of money. Real estate's up 6%, gold's up 10%, S&P 500 is up 14% annually. The Mag 7 are up 27%. Bitcoin's up 58%, and MicroStrategy's up double that, about 101%. Cumulatively, 3,000% in that period, while Bitcoin is up 885% in that period. Okay, that's over the last 5 years. What about the last 1 year? Well, if we look at it over the last 12 months, we see a similar pattern. Bonds are flat, real estate's up 6%, S&P 17%. Gold had a great run over the last 12 months, it's up 40%. Bitcoin's up 74%, but again, MicroStrategy is up almost double that at 134%. So if MicroStrategy, or strategy, is a levered way to play Bitcoin, where does it put the price of that? Well, let's take a look at that as well using some of these familiar metrics. Now, we don't have on-chain data that we can use, but we can use Bitcoin as an indicator, seeing how it moves as a multiple. We'll look at a couple other things. Now, to understand, it's no longer micro. Now it's just strategy. It's still the same ticker, MSTR. Right now, they're holding over 600,000 Bitcoin. So there's a couple things that we have to take into assumptions. Number one, how much more Bitcoin will they have by the time we get to the peak? They could have 700,000. We don't know, but we're going to use about a 600,000. All right, and because that's growing. We want to look at the Fibonacci targets of 140, 170, 220, and then we have to look at the premium or the multiple that they trade at. So let's first look at the Fibonacci's. Okay, so again, based on the Bitcoin extensions, we have a base case, a mid case, and a bull case. What we can see is that MicroStrategy could go up as high as $1,300 per this cycle, which is amazing. Amazing growth. Okay, but I would like to look at it more based off of Bitcoin's price and a multiple. For me, that makes more sense. And so if Bitcoin gets to a target price of 170, remember it was about 140 to 220. So if it gets to 170, what will MicroStrategy trade as a multiple to the amount of Bitcoin they hold on the balance sheet, the book value, or what we call MNAV. So we have to assume this out. Right now, it's somewhere in the 2 times MNAV. All right, so how many Bitcoin will they have? We don't know. Let's say they get to 650,000 Bitcoin by the time we get to the peak of the cycle. At a 2 times MNAV and Bitcoin get into 170, that would put the price of MicroStrategy up to about $1,000 per share. If we get a little bit higher, let's say they get to 700,000, they would get to over $1,000 per share. But could they even get a higher multiple? Could it be a 3x? I think it could. I'm going to show you why in just a second. But let's say that they get to 700,000 Bitcoin by the time we get to the end of the cycle. They just raised $2.5 billion through their recent offering called Stretch, STRC. And so they could easily get to that number, if not below past that. They get to a 3 times multiple. That could put the price of MicroStrategy stock up to $1,610. That'd be absolutely amazing. Now, why do I think they could potentially get that multiple? Well, let's take a look at this chart. So in the recent Q2 earnings from Strategy, it's about a 2-hour call. It's worth watching if you care about this stuff. What Michael Saylor showed in this presentation, he showed this chart. And what they're doing is they're selling these preferred products. So they've launched 4 now: Strike, Strife, Stride, and now Stretch. And what they're doing is they're selling Bitcoin-backed credit and equity instruments into the market, into hundreds of trillions of dollars that are stuck by mandates that cannot buy Bitcoin. All right, there's enormous appetite for this, and that's creating a leveraged play on Bitcoin. So they're selling those products and they're buying more Bitcoin. Now, if Bitcoin, over a 10-year period, if Bitcoin were to say go up over the next 10 years at 30%, right now in the last 3 years it's averaging 65%, but last 5 years it's like 85%, but let's call it 30. If it goes up at 30% over the next 10 years, and MicroStrategy is able to pull off a 30% leverage ratio, right now they're selling these products that gives them the leverage, that would mean that they would have about a 3 times multiple. If they can get up to 40%, that would put them at a 4.4 times multiple, and you can see how the math works out. So somewhere in the 3 to 4.5 times range seems about right. So MicroStrategy get into $1,600 per share doesn't seem that far off. Again, this is all just math, but it's guessing off of the math from historical, and as we say in the investing world, past performance is no guarantee of future returns. Okay, how do we use all this? Number one, I buy, I don't sell, and I hold. Okay, so what do? I use data to guide my decisions, okay? So we understand, as of right now, we have these cycles. Now what happens is, I don't want to, what everybody wants to do, don't do this, what everyone wants to do is they want to try to time it. I want to sell here, and I want to buy here, and I want to sell here, and I want to buy here. When you look backwards on the chart, it looks very easy. And I have all this data, and I have all these analytics, and I have all these indicators, and so I could just do that, right? No. The problem is that most people, well, unless you have a lot of luck on your side, you can't really do this. What happens is, let's say that you did buy here. Right around here, it starts looking expensive, so you sell. But the problem is it keeps running. And then by the time it draws down, you're going to buy back in. You probably won't buy here. You'd probably buy here, and you're going to buy in higher. You're going to buy in higher than where you sold out. Now, if you're just a trader and you're just trying to get more dollars, you're a fiat maximalist, you know, that could work. You could buy it at 1,000, sell it at 4,000, buy back in at 6,000, sell at 20,000, buy back in at 30,000, right? That works. But if your goal is to try to accumulate as much Bitcoin as possible, like my goal is, then I don't want to do this. What I want to do is I use the data to guide my buying decisions. So I'm averaging in, I'm dollar cost averaging into Bitcoin on a regular basis. So every time I have spare money, I'm putting it into Bitcoin. But what I'm doing is, when things start looking expensive, I can lower my buys. So I'm putting less money in. When it looks really, really hot, I might not even put my money into Bitcoin at this time. Maybe I'll leave it on the sidelines waiting. When it starts getting cheap, I can start laddering my buys back in. I keep buying. Here I hold. And then as it's getting cheap, I buy, and I hold. That's how I'm using it.